I'm Matt Bishard with REIT.com here in Atlanta for REITWorld 2014, NAREIT's annual convention for all things REIT. Joining me for this CEO Spotlight is Gordon DuGan, CEO of Gramercy Property Trust. Gordon, thanks so much for joining us.
Thanks, Matt. Thanks for having me.
Now, your company's recently made acquisitions in the office as well as the industrial market. How would you describe the overall health of those two sectors, and are there any regional variances you're looking to capitalize on?
Yeah, so the health in both sectors is very good right now. A couple of things. There's been very little construction in office and industrial, especially on the industrial side, and on the office side outside of major metropolitan areas. And so the dynamics of the market are very good. We're finding acquisitions between $5 and $30 million. We're terrific assets, good yields. So we really like where the market is right now. And then we're focused on top 25 markets, basically NFL cities plus LA, where you have good demographics, growing population centers, and the health of a lot of these places, at Dallas and Atlanta, where we are today. These are good markets, and they're coming back very nicely.
Can you talk about the company's at the market offering program and how it's going to impact the company moving forward?
So we've raised capital since we took over Gramercy in July of 2012. We've raised over $300 million of common. We've raised nearly $100 million of preferred. We put in place a $400 million credit facility, unsecured credit facility. So we've been very active in the capital markets, and the ATM is just another tool for us. What it allows us to do is sell small amounts into the market, and because we're buying these assets, $10 million industrial asset, $15 million industrial asset, $25 million well-located office building. With those types of assets, it really marries up very well. So you don't have to increase your leverage. You can just raise stock in small chunks, but it fits perfectly with the kind of thing we're doing. And then if we have chunkier things to buy, we can do a normal stock offering.
And lastly, what do you expect to be the biggest challenge in 2015 for Gramercy, and how is the company positioned to deal with that?
If you looked at 2014, we said at the beginning of the year we're going to make $600 million of acquisitions roughly. We should be just around that number roughly. And we were going to raise $3 to $350 of common equity to do so. People thought that was a really tall order. And our stock's gone up this year, and we've done all those things. So I think going into 15, there are a bunch of challenges, but we've hit this inflection point where those challenges are much more manageable. And I think the opportunities much outweigh the challenges. Going into 14, it was a tall order we're one of the fastest growing REITs in the United States. 600 million of acquisitions is a doubling of our asset base. We don't have to double our asset base next year to continue this type of growth.
Great. Well, we look forward to hearing more about your progress. Thank you. For more on this and other REIT news and analysis, be sure to visit REIT.com.